different products available for you as an exporter or seller. One of the problems, once you have done everything and you have got your agreement and you got your buyer, is financing it. You have to buy raw materials, you have to pay for labor, you have to produce these goods, ship it, and get paid after shipment, or if you have given a credit to your buyer, 60 days, 30 days later. So where do we get the money? How can we finance? Obviously from your cash flow and any other bank credits you have got, you try to do it. But you may have a big contract and it's going to be difficult to do it with your normal cash flow or finances you have got. Now, one of the ways is called factoring. Now, factoring is something to do with what we call account receivables. What's account receivable? Once the goods have moved, shipped out of your factory or warehouse, the payments is due. But you haven't got the payment yet because it's got to take some time because you gave credit and so on. What you can do with your account receivables, which are guaranteed payments, you can go and sell it. That's what we call factoring. You can sell it at a lower rate. You may be able, depends, you can go and take it to the bank and get extra finance against it. It can work out cheaper. Or at a discount rate, you sell it to the companies which their job is to take these and for the amount they charge you, they go and wait for the money to get paid. So that's one way of raising finance, which we call factoring. Now the other one is forfeiting, which is the same with account receivable, which is what is a longer term ones, or for some reasons they are delayed. Let's say you may have a payment due to you, which the payee hasn't been able to pay it, and there's insurance to cover it, and insurance would pay eventually, but not now, probably 6 months later. You can sell these at a discounted rate, depends how secure the payment is, the discount would go up and down. Now that's what we call forfeiting. Other way of doing it, let's say on a purchase order financing. Now, if you got a purchase order, remember purchase order itself is a contract. A company has obliged itself, signed a contract that they will buy these products with these specifications at these prices as they are supplied. So you take that to your bank and you raise finance with it. With those, it's actually quality of the buyers which are important. Are they big companies? Are they reliable companies? And if they are big reliable companies, your bank would accept it and give you finance. Obviously, at an interest rate, there is an arrangement fee as well to go for it. Now, if you cannot raise any finance through these things, you go to your normal commercial banks and you ask them for money and you put collaterals for it. Still, they want the documentary evidence that there is a contract going on. But they are actually raising the finance on other collaterals you may put there. There might be higher charges for it. The other thing is commercial banks don't like to work on a small contracts, less than a few $1 million. So that's another problem for a SME, a small to medium enterprises. Now, coming to the end of our discussion at the moment with regard to finances, there is one more thing which is very important as exporters you can tap into, and that is almost every country, their Department of Trade or whatever else their name may be, they have got schemes to promote exports. Now this can be for can be as subsidized costs for attending exhibitions or helping you with your export activities, giving you extra training, and it goes beyond that. There can be export guarantees, there might be bilateral or multilateral agreements. Your country is saying to your exporter, export to X country, and if they can't pay, we will guarantee it. It's sort of a insurance which they give you that make it easier for you to trade with the countries which you are not familiar with, or the banking system is not up to international standards. So it takes the risk out of it by providing what we call there can be export credit insurances as well. They may actually help with the payment of it, and they may have a budget for it. So it is worthwhile to check your local Department of Trade, the ministry, and see what is it available. They have got different situation with different countries. But definitely they would have some sort of export promotion program which you can enjoy using it, and is available to most of the local exporters. Thank you very much. See you later.